that afternoon and I found oil hit approximately $140 a barrel. So then I was happy again. You see, on one side I was a buyer, which I was unhappy, but as a seller of oil, I was happy. So this is my point here. If you're going to be rich in life, the reason most people are poor is because they're primarily buyers with very little to sell. You know, that old advice I talk about financial education, go to school and get a job. So let's say you sell your time, I'll sell it for $25 an hour. If that's all you've got to sell, you're not getting ahead because the Federal Reserve keeps printing money faster and faster. You have to work harder and harder, then you get taxed harder. So if you're going to be rich, the thing my rich dad taught me was you have to have something to sell every single month. So every single month, I'm selling my apartments, my units for 30 days at a time. I'm selling my oil, on the open market. And you look at what I did, even though I flunked out of high school twice because I couldn't write, because I really couldn't spell. Because when I write a book, I write it once, but I sell it into 100 different languages throughout the world. So every quarter, I'm getting a paycheck. So to be rich, it really understands the new rules of money requires you to know when you're buying, when you're selling. And that is essential to being rich today. Now, when I talk about the fool, it's called the greater fool theory. So like being a real estate guy, I go out there and somebody says to me, oh, this house is $100,000, but next year it'll be worth $200,000. Generally, that's what's, what do you call those guys, real estate brokers or mortgage brokers or stock brokers. Rich Dad said the reason they're called brokers is because they're broker than you are. So they're telling you to buy this stock or this house because the price will go up. Again, that's capital gains, not cash flow. And then you become the greater fool. The people, unfortunately, who are hurting financially today in the housing markets, they were the greater fool. They bought the idea that the price of real estate would keep going up. Well, as you and I all know, prices go up and prices go down. So if you're going to, the new rules of money and the financial intelligence and your financial education requires you to know to be balanced, be both buyer and seller and not be the greater fool. I say it again, when I fill up with gas, I get angry because I'm a buyer, but I'm happy because I'm also a seller. If you're going to be rich, you should be selling more than you're buying. One last thing is the one reason I really don't care much for mutual funds is because I don't know if you're the buyer, the seller, or the fool, but I'll make that decision. If you're the investor, then you put up 100% of the money, and I think you take 100% of the risk. It doesn't make sense to me. Same as you put money in the bank. And the mutual fund company, they put up 0% of the money, but what they get is 80% of the returns. So this is why I really don't recommend, it's good for most people, put your money in a mutual fund and just let it sit there. But what happens is you take 100% of the risk, you only get 20% of the returns, and you put up 100% of the money. That doesn't make sense to me. That's why I like to use debt, good debt as leverage and things like this. But again, this is your greatest asset right here. So I don't just blindly invest for the long term. I don't park my money. And the reason I don't park my money at the bank is because instead of 1971, the US dollar stopped being money and it became a currency. The word currency means current. You must keep your money moving. The people who are losing financially today are people who are parking their money in long-term things like savings accounts and mutual funds. That's good for the average person, it's good for the average investor, and it's better than nothing, it's better than being poor. But you're not getting ahead with old information, old rules of money. I'll just pass this last thing along for those of you who say, well, I don't want to be an investor, it's too much work. I understand. It was years ago, a friend of mine, says, what would you say to the average investor? And my friend, who was a very rich man, said, what I say to the average investor is, don't be average. Because today, in this high volatile environment, the average people, middle class, is getting wiped out. So, those are the new rules of money. You don't invest for the long term. You have to know when to buy, when to sell, and